Welcome to Trading Nation. I'm Seema Modi. Coronavirus fears not cracking market confidence today, this Tuesday, as stocks continue their rebound. But with the outbreak now growing to nearly 21,000 cases and China injecting $22 billion into its market to alleviate the pain, the risks seem very much intact. Joining us now to discuss more is Ben Steele, Senior Fellow and Director of International Economics at the Council on Foreign Relations. Ben, welcome to the show. Can central banks come to the rescue and offset the negative impact of coronavirus?
Yeah, this is very much a central bank-driven rally. The market's very much cheered by the intervention of the PBOC yesterday, as you said, pumping $22 billion worth of additional liquidity into the market through reverse repos. I don't think that number in and of itself is so significant, but it's an indicator to the markets that governments and indeed central banks around the world are willing to step up. And of course, we in the United States do have some room to bring interest rates down further.
Historically, how long does it take for the stimulus measures out of China to really feed through to the economy?
Well, remember, in the case of central banks, it's not just the indicators that are forward-looking, but the market is forward-looking. So to the extent that the markets believe that this liquidity will feed into increased borrowing, increased production, increased consumption down the road, you see a stimulus effect right away. So it's not particularly surprising that markets are rallying. They hadn't been certain before yesterday that indeed the PBOC was going to take any significant action at all. This is the first serious signs that China is reacting.
And the question is, will it work? Already, Goldman Sachs says the coronavirus will impact or further slow down China's growth rate from 6.1 to 5.5%. Does that sound accurate to you?
It really depends on how quickly the virus is contained. If it's contained very quickly, I think that's a reasonable, although perhaps optimistic forecast. If it's not, if the cases can continue to grow rapidly over the next several weeks, we're easily looking at a situation in which Chinese growth could have over the course of the first half of this year to something closer to 3%.
Do conventional tools like monetary policy work well in a scenario like this when we're dealing with a health scare like coronavirus, or are there other tools that the Federal Reserve can use potentially?
Well, I think here in the United States, we've got better potential for using this device because debt levels in China have really built up to grossly unsustainable levels. At this point, China is really pumping new liquidity into the market in order to dig ditches that are going to be filled in again. This has not been productive investment. Whereas in the United States, I think the Federal Reserve does indeed have room to stimulate parts of the economy that are in slowdown mode, that are particularly important. I'm thinking in particular of manufacturing and the housing sector.
Based on your conversations, do you think the prospect of a rate cut is now likely in 2020 here in the U.S.?
Yeah, I think it is. I mean, the FOMC traditionally has been like a giant tanker. It takes quite a few months in order for it to turn around. Chairman Powell has invested a lot in the rhetoric over the past 2 months of convincing the market that the Fed was now in wait and see, in neutral mode. But I would anticipate, if there are clear signs of a slowdown, that we will indeed see a rate cut sometime in the spring.
Lastly, Ben, the impact this could have on the trade discussions. There's been some talk that perhaps China will not be able to continue to buy $200 billion of U.S. imports as it had said it would as part of the Phase 1 signing.
Right. Well, you know, that was always a very ambitious target. Chinese officials themselves were pouring some cold water on it by suggesting that those numbers were subject to, quote unquote, market conditions. Larry Kudlow, one of President Trump's primary economic advisors today, suggested that there might be some delay in the quote unquote export boom from the United States due to coronavirus. So the administration here does appear to be preparing the markets to dampen expectations.
Well, we'll see if they stick to that message. Ben, thank you for joining us today on Trading Nation. Ben Steele, CFR. And thank you for watching Trading Nation. I'm Seema Modi. We will see you next time.